Joining me now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, good to see you. And you've called this AI fear trade overrated. Tell us why.
Well, because, any kind of automation, we've had histories of automation, Maria, and there's always been disruption, but there's always been fear that that disruption is going to end jobs. I mean, if you go back to the printing press, for instance, that put thousands of monks out of business that were hand copying Bibles, for instance. But of course, we know the story of that the whole printing press opened up a whole new industry. So I do think this one is far more accelerated than any other technological advance. And there will be some disruptions, but you have to be hopeful that this will also follow history and create new types of jobs that maybe we had never thought of before.
Yeah.
For instance, 60% of the jobs that exist today, 80 years ago, they weren't even in the definition of a Webster's dictionary. So I do think that this is overrated, but I do understand the anxiety that it causes a lot of investors right now.
Yeah, that's funny that the words weren't even in the dictionary. Mark Tepper, how do you see this going into, by the way, a very important week next week when NVIDIA will report its quarterly numbers?
Yeah, that's the big kahuna, obviously. So I agree with Peter. I think this is, the AI disruption fears are overrated, but what I think is most important is that a lot of the AI disruption sell-offs are overdone. I mean, software stocks down 30%. Should all of them be down 30%? Probably not. There's probably some babies getting thrown out with the bathwater. Wealth management, the disruption from last week. I mean, Schwab's down roughly 13% from its peak over a tax planning software that is only delivered to financial advisors, not to retail clients, that provides super vanilla tax strategies like contribute to a traditional IRA and save $1,000 in tax. So some of these disruption fears are overdone. Peter, my question for you is, are you using these sell-offs to identify some potential opportunities?
Of course we are. And, the other thing, I think what you're talking about, Mark, is embedded in that commentary is what is the ceiling that AI will present to us technologically? And investors are trying to figure that out. I agree with you that wealth management, for instance, high reliability, high touch businesses will never exist without human interaction. I mean, take medicine, which probably is the gold standard. Do we think that AI is going to replace physicians in their diagnostic capabilities? I don't think so. Physicians will use this as a tool, but with a lot of caution, because remember the last time I was on here, I highlighted that AI will always have errors. And if you have an error-prone system, you always have to have humans overseeing that. Yeah. So everything is selling off. And I do think that some of these sectors are just wild overreactions. And people finally, it's dawning on them, oh, yes, AI will have a widespread across society. But this is, in my opinion, a vast overreaction.
Okay. Meanwhile, we got a macro story that's doing well. Let's take a look at interest rates this morning, which is pulling back. The 10-year yield right now is down as we await a pretty good week of macro data. The yield at 4.03% right now. The January Fed minutes are due out tomorrow. Then we got the first read of fourth quarter GDP out on Friday. Economists are expecting 3% annualized growth. The Fed's favorite inflation gauge, the December PCE index, is also out on Friday, with expectations calling for an increase of 0.3% and 2.8% year over year. Peter, how important is this macro data this week?
Very, very important, Maria. Let's also think about the tariff recession that never showed up. So economists can be way off in their estimates, right? And I do think that all this present data really does support, I mean, it's almost like a Goldilocks economy, really does support the thesis for lowering rates. Prior to this data, I was kind of on the fence, but now that we're seeing such positive results, I do think that the Fed will consider lowering rates, and that's perfect for markets right now.
Before you go, I got to get your take on this Pentagon story. The Pentagon reportedly close to cutting ties with AI company Anthropic and labeling this company as a supply chain risk, potentially forcing defense contractors to sever relationships with Anthropic. The dispute is stemming from Anthropic, which is pushing to limit how its Claude model can be used, including restrictions on mass surveillance and restrictions on fully autonomous weapons. Defense officials insisting on access for all lawful purposes. Meanwhile, we've got SpaceX and xAI competing in a Pentagon contest to develop voice-controlled autonomous drone swarming technology. The move marks a significant expansion of Musk's AI ambitions into advanced weapons development. Peter, we know how much money has gone into defense tech under President Trump's leadership.
We do. And, the Pentagon hates to buy any weapon systems with strings attached. And this won't just be about Anthropic. Every serious AI company is going to face the same question. Are you selling a tool or are you selling moral authority too? So this is highlighting the fact that Anthropic really does have an opinion about how its system should be used. And the Pentagon just won't tolerate that.
Yeah. I mean, Liz, you want a government contract. You got to follow the government rules, right?
Well, and what's the whole point of buying Anthropic capabilities if you're not going to allow those capabilities to be used? This seems like a very strange hiccup in this relationship to me. And I don't know, maybe they're talking price really or something like that, but I can't imagine that this is going to really terminate their business with the Pentagon. Can you, Peter?
I can't, but capitalism has a wonderful way of finding its own natural level. And so if Anthropic won't agree, then certainly some other AI company will. And I'm sure that the Pentagon will succeed in getting what it wants.
Yeah. All right, Peter, great conversation. We so appreciate your time this morning. Thank you, sir. Peter Andersen
You're
with
welcome.
us on Markets. Stay with us. We'll be right back.